Over the last year, futures trading has become increasingly popular across the retail trading space. And because of that, in today's video, I'm going to be sharing with you guys a super easy futures trading strategy that is not only going to help you guys become profitable, but also help you guys pass your funded accounts. But real quick, as always, if you guys do find value in this video, make sure to smash that like button as well as clicking that subscribe and that bell icon. It would mean the absolute world to me. But without further ado, let's hop into the video. All right, so if you guys are not familiar with what futures trading is, I highly suggest you guys watch this video right up here because that's going to break down everything you need to know about futures as well as the point system, which is the main reason why a lot of people went from trading options to trading futures. So again, if you guys aren't familiar with futures, make sure you guys watch that video. That link's down in the description. But now, as far as the overall futures trading strategy, to be honest with you guys, it is pretty simple. Now, what this strategy entails is one, looking for key areas of price action. I'm going to show you guys how I find key levels, but then looking to see how does price react to that key level, and then also watching the volume as well as order flow to confirm buyers or sellers are truly present at that area. So first, I want to go over how I find my key levels on futures. And this will work in any futures market. It's just really up to you what futures you want to trade. Personally, I watch the S&P 500 futures as well as the NASDAQ futures. But this strategy also works in gold futures or oil futures, platinum futures, whatever it may be. So the first way that I find key levels on the futures is just very basic support and resistance levels. So if we're looking at ES on the daily time frame, we can see that we have this previous resistance point right here, as well as here, and then it turned into support. So if price were to come back down towards this area, I would look for a potential bounce. So this level is going to be between, it looks like 50.56 up to like 50, 66, 50. So about like a 10-point range. But again, we've seen in the past that this area was resistance turned into support. So it's a key level. And the next time price comes down towards this area, we should see some kind of reaction that we can take a trade off of. So if price were to come back down into here in the future, we would want to look for bullish price action, long lower wicks, bullish hammers, bullish engulfing, etc., as well as heavy volume on the buy side, which we can identify through basic volume, as well as order flow, or something that I personally like to use, Bookmap. If you don't know how to use Bookmap, guess what? I got tons of videos on that as well. Those links are also going to be down in the description. But that's the first way that I find other key levels. There's another one right here. We can see that we had tons of resistance and then price actually never came back and tested this area as support. So maybe in the future, if price were to come all the way down towards 48.50, which that'd be a pretty wild sell-off. But if it did come back down towards 48.50 to like 48.30, I would be looking for a potential bounce. Again, watching for bullish price action as well as bullish volume. So that's the first way that I find key levels. Now, the second way that I find key levels is through using Fibonacci retracements. Now, the thing is with Fibonacci retracements, you need to have an overall trend. Price cannot be in consolidation. So if we're looking at ES over here, where it literally did absolutely nothing for what, like weeks, you can't use Fibonacci retracements here because there's no potential retracement levels. You need to have a potential trend in order to use the retracement. So what I mean is we need to have a clear uptrend where we're setting higher highs, higher lows, higher highs, higher lows, or we need to have a downtrend where we're setting lower lows, lower highs, lower lows, lower highs, lower lows. So once we're able to identify that price is in a trend, in an uptrend scenario, you're going to find your clear-cut pivot low and your clear-cut pivot high. I have no idea if price actually made a retracement right here, but we're going to use it for this example. So we're going to take that clear-cut pivot low to that clear-cut pivot high, and there are two retracements that I use. I use the 50% retracement and the 61.8% retracement. Again, I'm looking for price to pull back down into these areas. And again, I'm looking for price to pull back down into these areas and potentially make it support. Now, as day traders, we're going to break it down to smaller time frames such as the 5-minute and even the 2-minute time frame to look for an entry. But as we can see on ES, price pulled down into that 61.8% retracement, broke what, like a couple points below it, and then reclaimed it very quickly, and then rallied from around, what is that, 49.63 or 53, whatever that number is, 43. So 49.43 all the way back up into these highs up here at 50.60. So what is that? Almost a 60-point move to the upside with literally no drawdown on this trade once it recovered from that fib. And even potentially today, price is clearly in a 4-hour downtrend. So as price starts pulling back to the upside, we can actually take a Fibonacci retracement from that clear-cut pivot high to that clear-cut pivot low and look for price to reject off the 50 or 61.8. And again, you can see price got very, very close to that 61.8 before rejecting from around 52.10 all the way down to 51.04, which is literally about 100 points. And to show that this stuff works, you can see that I took that same clear-cut pivot high to pivot low on ES today and put it in my pre-market plan inside a Team Bull, showing to watch for a rejection here as well as right here. And again, we can now see from that level, that 52.1650, price is now all the way down at 51.03. So again, this stuff works. And again, I'm looking for the same thing when price trades down into a fib as far as a bounce, or up into a fib as far as a reject. I want confirming price action, and I want confirming volume to confirm a short entry. If price comes down for a bounce, bullish price action, bullish volume, bullish order flow to confirm an entry. Again, what we're doing is we're finding these key levels, but we need to have confirming price action before we take a trade. If we don't have confirming price action at our key level, there is no trade. So that is two ways that I find key levels. Now, the third way that I find key levels, and this has actually been working very nicely in this current market environment. And personally, I really like to use this when the market's either chopping or it's just not making as large of moves, or if we're not trading near any other fibs or support or resistance. I then head on over to supply and demand. Now, I just dropped an entire video showing you guys on how to draw these areas of supply and demand. So again, if you guys do want to learn about that, that link is going to be down in the description, but I am going to break it down very quickly what I look for when plotting my supply and demand levels. So in that supply and demand video, I actually was watching a 30-minute demand zone when I was actually doing the video, and price came right down into the demand, and that was the exact low of, I think it was on Friday is when I recorded it. But if we go to the 30-minute time frame on NQ, when it comes to plotting my demand levels, what I'm looking for is a small red candle before a large aggressive move away from that level. When that happens, that creates a demand zone. So if we were to just plot this demand zone right here, what I do is I take the open of that red candle to wherever that lower wick is. This creates demand. So now, as we can see, price traded right down into that 30-minute demand zone on Friday, made it support, and then we saw that nice move away from it into the pre-market session today. Going to the 4-hour time frame on NQ, same thing over here. We can see that we have a small red candle right here before a large aggressive move away from that red candle, then creating demand right here. So this is going to be your demand zone. Again, you're going to take the open to that lower wick and you're going to extend it to the right, and that is then going to become demand. So as we can see, that day, price came right back down into that demand, and then we got a large aggressive move away from the level. And then what is this? A few days later, maybe a week later, price came right back down into that demand level, made it support again before seeing a large aggressive move away. So again, when I'm plotting demand, I'm looking for a small red candle before a large aggressive move away. And then from there, I'm looking for price to trade back down into that demand, make it support, and look for a long entry. But as always, we need bullish confirmation, so bullish candlesticks as well as bullish volume to confirm a long entry. And then finally, supply zones. Now with a supply zone, what we are looking for is we are looking for a small bodied green candle before a large aggressive move away from that level. So we can see right here that we have the small green candle before a large flush to the downside, and then even lower. This then creates a supply zone from here to here. Now, as we can see, yet again, price traded right up into that supply zone, made it resistance, and then pushed to the downside. And again, all of this stuff isn't after the fact. If you guys tune into my live streams every single morning at 8 a.m. Eastern time, all these supply and demand zones that I'm showing you right now were already discussed before price even touched it. But these are literally levels that we have talked about many, many times in the live stream before price ever came back and reacted to it. So these levels work. But like I said, when it comes to using supply and demand, I use it more so when the market's just in a choppy area and it's not near any fibs, it's not near any support or resistance levels. So that's when I'll mainly start relying on these supply and demand levels. The one thing that I'll say that I don't like about supply and demand is sometimes it can be like a larger zone that you have to watch. Like there was one, I think it was over here on NQ. I mean, this is a pretty large 30-minute zone that you would have to watch. So that's the one downside to using supply and demand. You got to get really good at watching price action inside of these levels, because we might react here, we might react halfway through, maybe at the very top of the supply zone. We don't know. That's why we have to watch the price action. We have to watch volume and ideally bookmap, because that's going to show where the buyers or sellers are. Now, once you start using these key levels of price action, those are honestly like the only areas that you want to be looking for trades, because that gives you the best possible risk to reward. If you enter at a 50% retracement, let's just say for a reject, your stop loss is right on the opposite side of that 50% fit. Amazing risk to reward. Or if price comes down to demand, you start to identify bullish price action and a lot of heavy volume on the buy side, you can get long with your stop loss right below those candles. Again, an excellent risk to reward. Or support, just like the ES example. If price were to come back down towards that level that we were talking about earlier, I guess I deleted it, we would be looking for a long entry as long as we got that bullish confirmation, and our stop loss would be right below support. And I know a lot of traders, they want to take trades every single day, but I can guarantee you, if you guys stay patient and wait for price to come to these key levels, not only are you going to see a larger reaction in price because these are key levels, but you're also going to notice that you have a better risk to reward, and ideally you have a lot larger wins than had you just been scalping intraday price action. But that's going to wrap up this video on this simple future strategy. Again, look for key areas, wait for price to trade to it, and look for confirming price action and volume. When you get that, you can take a trade and your stop loss is right on the opposite side of that key level. But if you did find value in this video, make sure to smash that like button as well as clicking that subscribe and that bell icon. It would mean the absolute world to me. And make sure you guys tune into the live streams every single morning at 8 a.m. Eastern time. Other than that, I'll see you guys in the next video.